Welcome to ETF Battles. I'm DeLegge, where it's okay to binge watch our weekly program. I mean, what's the worst thing that can happen? Whatever pounds you gain from watching ETF Battles should definitely be offset with gains in your investment portfolio. At least that's the goal. Today's ETF Battle is between two ETFs focused on the U.S. real estate market. We've got the iShares Residential Real Estate ETF, that's ticker symbol REZ, also known as REZ, versus the SPDR S&P Homebuilders ETF, that's ticker symbol XHB. Another way to think about today's real estate brawl is a battle between the landlords and the home builders. Now, these are two distinct groups with distinct financial interests, so keep that in mind as today's battle unfolds. Before I introduce our judges, if you're new to the show, none of the battle outcomes are predetermined or known ahead of time by any of the judges or by myself. You simply give us your battle request and our judges call it as they see it. So here to judge today's matchup is Todd Rosenbluth, head of ETF and mutual fund research at CFRA, as well as John Davi, founder and CIO at Astoria Portfolio Advisors. Judges, welcome to the show. It's great to have you back.
Thanks, Sean. Good to be with you. And Rob, too.
So the four battle categories are cost, yield, performance, and then we've got a mystery category. That's where our judges get to choose the factor or factors that they feel are important in supporting their analysis. And who knows, that mystery category could end up deciding which ETF wins this battle. So my scorecard is ready. As you can see, it's blank. And we're going to get this battle started. We're going to go through these four battle categories one at a time. Each of you are going to pick REZ or XHB as the winner in each respective battle category. You're going to have 30 seconds to do that. Let's begin with the first battle category, cost. Todd, you've got 30 seconds. Go.
XHB is by far the cheaper ETF. It costs 35 basis points. That's a lower expense ratio. But we at CFRA think investors, when you're looking at sector ETFs like these, you want to go beyond the expense ratio, understand the price to net asset value, and understand the liquidity. You have much more trading volume in XHB. You've got more liquidity, and the price to net asset value is more in line. So cost is one of the three pillars that we use at CFRA, and it stands out for XHB in our opinion.
John, what's your take on cost? Who wins the battle?
So I usually disagree with Todd, but in this case, I would say that XHB is the winner from a total, execution standpoint, market impact standpoint, bid offer, discount to net asset value. It's more utilized as investment vehicle along as like a trading vehicle. So I think that's why you have overall lower cost compared to REZ. Which there is a place for REITs in a portfolio, but I think there's some other ETFs within a REIT space that are a lot more liquid, larger, and that would, be a better battle compared to XHB. But in this instance, between these two, I would say XHB.
Okay, we need to move to the next category, which is yield. John, who wins the battle?
So I think here, REITs as a business, their goal is to, produce high cash flows, and they give those cash flows back out, to their investors. So I see a yield of about 3.4 for REZ, whereas it's like 95 basis points for home builders. I think, home builders is an area where if you're constructive on the economy, you think we're entering some cyclical upswing, you're going to buy that. Whereas, you're going to buy REZ if you just want a cash flow producing asset, if you want, kind of soften your portfolio volatility with a little bit of above average income. So I would say in this category, REZ is the clear winner.
Todd, what's your take on yield? Who wins the battle?
If we're talking about yield, the real estate one, REZ, has a higher yield. To simplify it, John talked about it's triple the yield for REZ versus XHB. But I would point out that those dividends are not secure and stable. We are likely to see a lot of properties fail to get rent paid to them, and they must pay the dividends based on the cash flow from operations that are there. So I don't think the dividends are secure for all of these REIT companies, but you get the benefits of diversification. The yield is certainly higher for REZ.
The next battle category is performance. John, how do you see it?
So I look at a CAGR, very long-term time horizon. I don't think you should focus on, year-to-date, 1 year, 3. When you invest, you should invest ideally for, very long period of time, 5-10 years, I even think a lot longer than that. So if you look at the CAGR since compound annual growth since 2007, I see REZ about 5.6 versus 2.7 for XHB. It's had a better Sharpe ratio. Look, at the end of the day, what goes on in the next year or two, you could have one, outperform the other from an absolute basis or even a risk-adjusted basis. But, you really want to kind of think long-term. So I'd be curious to hear what Todd says.
So who's your battle winner, John, between REZ and XHB?
REZ.
REZ. Okay. Let's go to Todd. Who's your battle winner?
John, I mean, you're ignoring like the last few years. So if we look at I realize we shouldn't rely on past performance, but on a 1-year basis, REZ is down by 2,000 basis points versus XHB. On a 3-year basis, it's down by over 350 basis points. There is more volatility that's taking place in XHB, so you certainly have to be mindful of that from a standard deviation standpoint. But from a recent performance perspective, XHB looks better. And as we at CFRA look forward, as I know you do, we think the home builders have much stronger fundamentals, and we think the performance is going to be stronger in the future for XHB.
I think there's a debate between value and momentum, or value and growth. So as a deep value guy, it's ingrained in my DNA, I would say REZ. So we'll agree to disagree on this one.
Okay, very good. Well, we need to move to the mystery category, and this is the part of the show where the judges get to choose that single factor or maybe multiple factors that could be the deciding thing that determines who the final battle winner is between REZ and XHB. So let's stick with Todd. What is your mystery category?
So the mystery category for us at CFRA is exposure, and what are you getting based on what you think you're getting from it. And so XHB, the name is Homebuilders, but it owns not just home builders, it owns home retailers, it owns building construction, but that's related to the home and to home construction. With REZ, even though the name is residential in it, you actually have half the portfolio in non-residential REITs. Healthcare REITs is actually the second largest of those industries. Specialty REITs is the third one that's there. So you're not getting what you necessarily expect. It's actually going to be driven by other industries within the real estate sector. So XHB, home builder in the name, home in the name, and you're getting home-related companies. So XHB, home is where the heart is.
John, your mystery category winner?
That's going to be a tough act to follow. Home is where the heart is. But, look, I would say at the end of the day, I want to go back to the value versus growth. I think there's a lot. REZ has a PE ratio of 13. XHB has a PE ratio of about 15. I think that even though that there's potential for not a lot of rent payments to come out, like Todd said, I just think, as I look forward the next 3 to 5 years, you want to kind of own value, it's underperformed. And if you look at a much longer time period, since 2006, REZ has outperformed. So I'm going to stick with REZ.
So REZ is your mystery category. What was your mystery category anyway?
Valuation.
Okay. So that's your mystery category. And you've got 30 seconds then to recap your final overall winner. We're going to stick with you, John. Who wins
I think,
battle?
Touching on what Todd said, what worked in the past rarely works going forward. And, I just think that, if you got a valuation premium, if you got a valuation, a margin of safety with the REZ trading at a lower valuation, it's had historical, some better risk-adjusted returns. I think, I don't see a lot of homes being built, in the next year, with this deep economic recession we're in. I think, REITs is typically one of the sectors that works when you're in this stage of the economic cycle. So I would lean on REZ if I'm going to pick one.
All right, Todd, your last chance to recap your overall winner between these two ETFs.
Yeah, I'm sorry, John. XHB is the cheaper ETF. It is the one that has performed the best within the time period since you and I have known each other over the last 3 years, one another. I had hair and you had hair back in 2006. The exposure you're getting much more than what you think you're getting with XHB. XHB is the winner if you want to have something that's home related within your portfolio.
Let's
All
do
right.
this in 5 years, and we'll see, which one of these outperformed on a risk-adjusted basis.
I'm going to have less hair in 5 years.
All right. Well, I haven't had a haircut since February, so I know I have more hair than most of us. But the judges have spoken, and based on my battle scorecard, this is a split decision, guys, with XHB winning on cost, REZ winning on yield, and then everything else, performance, the mystery battle category, that was a split decision. And so this is a split decision between these two ETFs. I guess the real question boils down to, how are you using the ETF? What type of exposure are you looking for in terms of U.S. residential real estate, or just the real estate marketplace in the U.S.? Are you focusing on yield, or are you maybe looking for some growth? Obviously, these two ETFs hit both in a different way. So that certainly is something to consider. Great job to our judges on giving us their input and analysis. And before signing off, which ETF battles would you like to see in our next episode? Post your thoughts on our YouTube comment section or hit us up on Twitter at ETFguide. Be sure to hashtag ETF Battles. Thanks for watching. I'm Ron DeLegge. And until next time, watch the battle before you invest right here on ETF Guide TV.